So if they cross that marker,
Exactly.
that should satisfy the buy side bulls.
You think it will?
There's not a large likelihood given the supply remains constrained. There's no question that there is a lack of demand. There's definitely a lot of demand, but to meet that bar would be difficult. The caveat, though, even if they meet that bar, given the crowdiness we have in terms of long and exposure to AI semis and Nvidia, I don't know what much it could do to the stock.
Paul, 90 billion. I know you like the longer term play. So how much are you thinking about Kunjan's forecast here, and what to see for the next quarter?
Well, I hope he's right, and I hope the not the consensus number, but the whisper number is right, that it is not the 87 billion-ish expected, but the 90 billion whisper. I feel pretty good with that. I think what the company does, if you take a look at their track record, they put out a figure and they plan to beat it by $2 billion because they seem to do that too precisely each and every quarter. And so I think that they will make us feel good about the guidance. I hope it's 90 billion. We'll see. But again, we are in a situation where demand is voracious and supply, not just for Nvidia, but for everybody up and down this supply chain, it's going to be tough. And I don't think it's going to be relieved, the supply-demand imbalance, until we get into calendar 2028.
Hey, Ed, just in the last minute that we have before we do expect these numbers to cross, the China part of the equation here, you spoke to Jensen about this on Monday. He was fresh off his trip from China with the president. What did you learn about how Jensen is thinking about China right now?
He's going to have to reconcile that on the earnings call. Basically, in March, he said that they were ramping up supply chain because they had the US licenses and they had the orders from China. The president went to China and discussed H200, but said that China doesn't want to place orders. It's up to China because they want to support their domestic industry. So what Jensen told me is China needs to decide how much it wants to meet demand of its companies for Nvidia's chips versus protect its own domestic industry. And that either will or will not be explained very clearly in the CFO commentary document and then on the call, because the base case assumption for Nvidia right now is zero revenues from China, even if they've said it's a potential $50 billion market on paper.
Yeah, just a reminder of expectations for Nvidia, as we just get a few seconds away from when we do expect those numbers to cross. Second quarter revenue estimate, according to analyst survey by Bloomberg, $87.2 billion. That is the expected outlook. The expected adjusted gross margin from analysts, 75%. CapEx estimate, $1.61 billion. And we have got Nvidia crossing right now. First quarter adjusted gross margin, 75%. Second quarter revenue forecast beats estimates. The company sees second quarter revenue $91 billion, plus or minus 2%. The company sees first quarter adjusted earnings per share at $1.87. The company sees first quarter data center revenue at $75.2 billion. Second quarter revenue coming in at $89.18 billion to $92.82 billion. The estimate was for $87.36 billion. First quarter data center revenue coming in above estimates at $75.2 billion. The company also saying it's moving to a new reporting framework with two platforms. The company also sees second quarter operating expenses at about $8.3 billion. The estimate is for $7.93 billion. Ed Ludlow, I want to go back to you. I risk messing you up mid-live blog, I imagine.
You're good.
So forgive me.
It's okay.
Your immediate reaction as NVIDIA shares in the after hours bounce around a little bit, but down about 0.6%.
Yeah, which, let's be honest, there's hardly any reaction at all. That is the whisper number for the fiscal second quarter, the period we're currently in. Revenues 91 billion, plus or minus 2%. The bull case was for $90 billion of revenue. We won't learn much more until the call, right? The broader story is, are they moving beyond hyperscalers to a more diverse group of customers? Like, if you were to aggregate the sell side commentary going into the print, the numbers are just irrelevant. No matter how fantastical, they're going to look a bit more deeply on the new reporting structure. You just got to forgive me and give me a bit more time to read about it, because I haven't got a clue.
Yeah, well, I don't think anyone outside of NVIDIA has a clue about the new reporting structure. So we'll give you a few minutes. NVIDIA shares down in the after hours, down by about 2.6%. We're going to let Ed look at some of those numbers and that new reporting structure. In the meantime, We do want to note that the company reports $80 billion added when it comes to a share buyback authorization. That news crossing just moments ago. Now a redhead on the Bloomberg terminal. Nvidia boosting its quarterly dividend to 25 cents a share from 1 cent per share. I want to bring back Paul Meeks, head of technology research at Freedom Capital Markets. Paul, your reaction? Pleased with these numbers?
It seems to me that everything is in order. Like everybody else in the preview commentary, the most important metric that they could release ahead of the call was this revenue guide, and it looks fine. I'm a little bit, I don't want to say dubious, but a little bit confused by the change in the reporting structure.
Yeah. Wait, why would a company do that? A company like Nvidia that has, such a following right now, so many analysts covering this. Some people consider it a macro event when it reports earnings. Why change reporting structure right now?
One of the things that they are doing is they're trying to build a walled garden, just like Apple did in a previous technology transition by going beyond the GPUs and interconnecting in the data center all the different pieces. So this may not be some sort of dodge, because the company typically is first class, very transparent, but it might be just reflective that they are moving beyond just selling GPUs and they want to organize their business to prove it.
Kunjan, let's bring you back in here, Bloomberg Intelligence senior semiconductor analyst, and just get your initial thoughts on these first few numbers.
Yeah, look, everything looks kosher. Like your earlier guest was saying, they have made us habituated to expect them to come out and expect and to beat by such a range, mid-single digits. And that's a problem. When you do that, it has become sort of a baseline, no longer something that stands out. If they didn't beat with this magnitude, that would be something worse. I do like the buyback announcement, and to address that resegmentation, I think we like that move. Look, our model has been trying to guesstimate this breakdown that they're giving in the data center business by the type of end customers for a while now. It's always painful to really get that out of them and figure it out. So we like that move that now they are coming up and disclosing that breakdown. That also allows people to really see that it's not just the 4 top cloud customers that they're buying and running the business for Nvidia, right? There's also growth coming from other vectors that people often miss out because it was not publicly showcased.
Mm-hmm. And Ed, we are just getting a headline crossing that the company's saying that no shipments of data center Hopper products to China. How does that live up to the expectations of what you and Jensen Huang had discussed?
I don't know how you did that so quick. I literally just posted that in the blog before you read it out.
This is real time, Ed.
That's the base case assumption. What Colette Kress, the CFO, is pointing out literally in her CFO commentary as opposed to figuratively is that this is the fiscal first quarter financial year 27. The base case assumption was no product data center wise to China. So it meets that expectation. Mm-hmm. Reminding me in that note that in the first fiscal quarter of the fiscal year 26, they had almost $4.6 billion of sales in that same period 1 year ago. So that's all we're learning, really. There was some other stuff that I scanned through on the revenue highlights of the CFO commentary. I thought we'd learn more, but right now that's it. What's
the question you'd ask about that on the call if you were given the chance, Ed?
Why did you tell everyone in March that you were ramping up your supply chain and that you had both orders from Chinese companies along with the US licenses to issue those orders? Why'd you say that? If the state of play is clearly based on the president's visit, that China is not going to permit its tech companies right now to place those orders, and why did Ed Ludlow not ask Jensen that more explicitly on Monday? That's probably what I would reflect on.
Hey, you can even Monday morning quarterback your own work, and pretty easy to do that. It was a great interview with Michael Dell as well, too, from Las Vegas. Hey, I want to bring back Paul Meeks, head of tech research at Freedom Capital Markets, and also Kunjan Sabani, Bloomberg Intelligence senior semiconductor analyst. They're joining our roundtable. Kunjan, you mentioned that you like this additional $80 billion in share buyback. Why is that a good use of cash? Convince people that that's a good use of cash in your view.
Given the stage we are in, like I said, every quarter now in terms of near-term numbers, it's basically table stakes that to beat by mid-single digit. They've already given a 2-year pipeline of $1 trillion. So I don't know what else they could do just in terms of the print to really get excitement. So buyback usually is a good strategy. And remember, they're generating enormous amount of cash that right now, despite all the big investments they're making, massive multi-billion-dollar investments they're making, they don't have other way what to do with that cash. So a buyback always is a sort of preferred go-to for us analysts that does reward shareholders from time to time.
Paul, I do want to get your thoughts on just the market's initial reaction. Actually, our Bloomberg coverage, the headline, Nvidia gives disappointing forecast as chip competition mounts. So we do know that number, 91 billion, but disappointing. What do you make of that word?
I think it's BS. Yeah, I think it's just fine. And we'll get some more commentary as we get into the call starting at 5 o'clock Eastern. But now the stock is, trading after hours flattish. And, the stock had a pretty big run up in recent weeks after it essentially was a poor performer from July of 25 until just a few weeks or months ago. And so I don't think that there's any problem at all with the guidance. I think if they do announce Chinese business, take whatever revenues you're expecting for that fiscal year and add 15% to it. So it's only going to be icing on the cake. But I feel pretty good about it. But, Jensen will do what Jensen does, right? He's the AI Jesus, and he's an evangelist and make us all feel better about the long term. I'm not necessarily worried about what they printed or even this guidance, but this guidance is not disappointing. I think it's fine because you know what? It'll be $91 billion. And then they're going to upside it like they always do. So this will be much better at the end of the day than the Whisper.
We're speaking to Paul Meeks, head of technology research at Freedom Capital Markets. Also with us, Kunjan Sabani, Bloomberg Intelligence senior semiconductor analyst, and our own Ed Ludlow, a Bloomberg Tech co-host, holding down the fort in the San Francisco studio. Nvidia shares right now higher in the after hours by about 1%, reversing course where they were as low as 3% in the after hours. The company gave investors a sales forecast saying that revenue in the 3 months ending in July will be $91 billion. The company said in a statement, though analysts estimated $87 billion on average, projections surged as high as $96 billion, according to data compiled by Bloomberg. I want to bring back Kunjan Sabani, Bloomberg Intelligence senior semiconductor analyst. I know, Kunjan, you've got to run in just a couple of minutes. What's your note going to be headlined tomorrow?
Well, I have to wait for the call and to talk to the company before I can deliver that. But at least from the press release, I would say everything looks fine. No need to panic. No need to worry. And the stock seems to be turning around, by the way, as we are going through this roundtable.
All right. Kunjan Sabani's got to run. He's Bloomberg Intelligence senior semiconductor analyst. Our roundtable, though, continues. We got Paul Meeks, head of technology research at Freedom Capital Markets, and Ed Ludlow, Bloomberg Tech co-host. Hey, Ed, I want to go back to you as you've had a little bit of time to digest this and actually read some of the coverage, too, from a big team here at Bloomberg News that's reporting on this. What continues to stick out to you from these results?
Yeah, if you put the numbers to one side, right, so $91 billion plus or minus 2% in the fiscal second quarter, it puts that outlook or that guide pretty firmly in the bullish part of the consensus or forecast on the sell side, and buy side expectations were very high. So what's the extra bit here? What is beyond Nvidia selling GPUs at the level that we would expect? And if you read Colette Kress, the CFO's commentary, it's that extra content in the data center, InfiniBand networking, Spectrum-X Ethernet, NVLink systems, which is what combines a lot of the servers in aggregate to form that supercluster or supercomputer. That seems to maybe account for some of the beat in the quarter gone and the confidence in the outlook to come. And we are bouncing around. Now we're modestly higher, 0.2%. We were lower. I think your last guest, Paul himself, said, right, like, you're not going to get everything from the earnings release. Let's wait and see what Jensen Huang has asked and what he says.
Paul, I do want to go back to you just kind of on some of your thoughts on the company's data center expansion, because Nvidia had announced a few weeks ago investing as much as $2.1 billion in the data center developer IREN, or I'm not sure, is it IREN or EREN? You have a hold rating on that company. What are you kind of looking for Nvidia to talk about with that partnership in this call?
I don't know if they'll specify it because Nvidia, because it generates so much free cash flow, as you may have noticed the last couple of weeks and months, they seem to be sprinkling the infield with $2 billion for everybody like Oprah. If they do highlight IREN, IREN is a neo cloud, and what they did with IREN was pretty unique because first of all, they bought some capacity for Nvidia's own use, not to resell to customers. And then they also don't necessarily have a warrant, but they have a right to purchase more IREN stock, and actually a significant amount, but it's tied to Nvidia and IREN delivering GPUs together. And I think they get the full payout once they've supplied IREN and its customers 600,000 of their GPUs. So it is a unique deal. It is a little bit different, but Nvidia, with all of its cash, it's been doing two things. It has been acting like a venture capitalist to plant seeds throughout the entire ecosystem. Remember my point that they're going beyond GPUs. And because they don't really have anything else to spend on, they're buying back some stock.
Ed Ludlow, you interviewed the IREN CEO on Monday. What was your take on the company's plans for this kind of partnership?
Yeah, so co-CEO Daniel Roberts, IREN is a neo cloud that is largely dependent on NVIDIA architecture. And what is so interesting is we're talking about the industry being in a position where demand is fast outpacing the industry's ability to supply. But as IREN would tell it, the bottleneck is not NVIDIA being able to get the server designs or the GPUs into place. It is everything else. It is the utilities trying to get the infrastructure in place to switch that data center online. It's the concrete, the manual labor, the tin can that needs to go around it. So it's very interesting to hear that experience through their experience of what it's like to try and build. And NeoCloud is just a data center for AI workloads. Simple, right? But NVIDIA doesn't appear to be the holdup here.
Let's bring back Jay Goldberg, Seaport Research Partners analyst there. He, again, is the only analyst tracked by Bloomberg with a sell rating on NVIDIA. Jay, I imagine that this report is not enough, and I don't want to get in trouble with compliance or anything, but not enough for you to change your rating on NVIDIA?
No, nothing I've seen here sort of meaningfully alters the trajectory of how I think of NVIDIA's prospects.
What is your bear case? What is your bear case on the company, and how do you see it? How do you see the stock falling so much in just the next 12 months?
So just to be clear, I've never told people to short NVIDIA. I've always positioned my take as an underperform. Go back to when you interviewed me in May of last year. That was what I was saying. Yep. And I think that's played out. Right? It's just underperformed. It's a good company, but it's hard for them to live up to $5 trillion market cap expectations, right? And we've seen that this year. Like, they've underperformed the SOX and the SMH ETF. They've underperformed. They've gone up whatever 20-30% this year, I think, and lots of other names in the sector have gone up a lot more. And it's just a function of how big they are. And I think there's, if you look at the results, I mean, one of the things that stood out to me was they're increasing the dividend, which is a great signal, but it's a massive increase, and right, it's sort of signaling that they're running out of ways to grow faster. Like, couldn't they have used those funds in a different way?
I just want to point out, you have a sell rating on the stock. $140 is your price target, and that is a period of 12 months.
Yes.
Okay, so you're not telling people to short the stock, but you believe that the valuation should be $140 per share, not $220 a share.
Yeah, I'll obviously revisit that today, but certainly, okay. I think it's hard to get excited about the stock when there are better opportunities out there.
Paul, come on in. I imagine you disagree with Jay there. Is it easy for you to get excited about NVIDIA still?
Well, Jay had some very good points, and I obviously admire him and his work, but I would tell you that this is not a situation like Cisco was right before the internet bubble popped, where it was trading at a couple hundred times earnings. If you believe, and I don't formally cover NVIDIA, I cover the neoclouds, but if you believe the consensus estimate for next fiscal year, now this would be the fiscal year for NVIDIA that ends January 31st of 28, which is really calendar 27. Right now we are trading at about half of the growth rate expected in that year. and we're trading at an S&P 500 multiple. Actually, I calculate about one click below that. And here's a company that really hasn't seen much multiple expansion over the years. It's all been in delivering the mail. And so my point is, I'm not necessarily disagreeing with the trend longer term, and it is hard to grow something this large, but we're trading at less than a market multiple. It's not actually expensive at all. If it was expensive, then I'd probably swing from bull to bear, but it's cheap.
Ed, I do want to bring you back in. Just going back to the China story here, because we've seen this company's revenue, the revenue that they generate from China, declining quarter after quarter. They're now continuing to exclude China revenue from their outlook for the second quarter. Does Nvidia need business from China at all?
So there's the basics, the numbers, which is the quarter did not include any Hopper-based systems to China. And the outlook for the current fiscal second quarter in financial year 27, as you said, does not reflect any China revenues or shipments to China. And what Jensen Huang and Colette Kress, the CFO, have said is that China, from a starting place of zero, baseline zero, is a $50 billion opportunity. But if you again get out of the income statement, the story with China was a critically important end market for data center. And as Jensen Huang would like to say often, 50% of the world's AI research, or the researchers themselves, are in China or from China. And so, if you buy Jensen Huang's mile-high, bigger picture view of what is going to happen with AI, the build out of AI training and transition to running of systems of inference, to their mind, being a participant with China is critically important. And again, in that interview Monday, and I'm sorry to go back to it, but the word he uses deliberate. The demand from Chinese tech companies is, quote, incredible. It's just they're not permitted by the Chinese government to do business with Nvidia.
Yeah, certainly on the call, a lot of questions and perhaps some more answers when it comes to the China business for Nvidia. I want to bring back and remind everybody that was just Ed Ludlow. He's the Bloomberg Tech co-host. You can catch him every day on Bloomberg TV at 11 a.m. Wall Street time. Jay Goldberg, Seaport Research Partners, joins us too, along with Paul Meeks, head of technology research at Freedom Capital Markets. Jay, I want to send a question over to you about the reporting structure and the reporting framework for Nvidia. I don't know if you had a chance to see this yet, but this caught Ed's attention. It caught our attention when these numbers crossed at 420. Lynn Dewan from our Bloomberg technology team, she's a tech editor, she writes that the company's transitioning to this reporting framework, that in the future, Nvidia will report for two separate market platforms, data center and edge computing. The company says the data center segment will include business with the hyperscalers and those building AI-focused data centers. Edge computing will highlight the devices it sells for PCs, game consoles, robotics, and the like. I know this is a little bit of a wonky sort of accounting question, but as an analyst, I know you want to see clearly defined areas when it comes to segment reporting. What's your initial reaction to this new reporting structure?
So at one level, it makes sense. I have to think through it, but data center is really where people are focused on.
It's kind of the number that it's the only number people care about, right?
It's the only number that people care about, with the exception of my 14-year-old son, who only cares about the gaming GPUs and is going to be very saddened by this news.
Okay. He'll still get the gaming GPUs. They just won't be reported out separately.
It's getting harder to get them, and they're not getting updated as fast as he'd like. But
well, that's interesting because that's the DNA of the company.
That's the DNA of the company. Yeah.
Ed, you're a gamer. So, come on in here.
I'm a gamer. I'm a gamer, but
you're a gamer too, Jay?
I'm willing to forgive them on their pace of gaming GPU upgrades.
Ed, I know this is not the number that everybody's focused on, but since this is Nvidia's DNA and you're a gamer, what do you make of the gaming GPU issue? They're leaving it to someone else now? What is it?
I don't know that it's an issue. I mean, again, I'm just, Nvidia's changing the reporting structure. I get that. So it's just not highlighting gaming, but gaming is not the growth engine.
Yeah. It's tiny for this company.
It's tiny, but again, maybe you just consider the GPU that goes into a gaming console or your home rigged gaming PC it's still at the edge. What people say is at the edge. You're running computation at a device local to you. And you know, the story that Jensen Huang's been telling on the road, right? I think CES or GTC, whatever it is, whatever event. It's that the role of the GPU in the video games industry is now as much about the development of that video game, its ability to generate pixels, right, rather than animate. That's the story for Nvidia with gaming. The gaming industry is Nvidia GPUs and data centers still, as much as it is about the GPU. And by the way, I got like this Frankenstein's monster Acer that's got, you know, an amazing Nvidia GPU in it and an Intel processor and core. But like, so what, man? It's all about the data center.
It is all about the data centers. Hey, speaking of the data centers, I want to bring Paul Meeks back in here. Ian King and Dina Bass writing separately on the live blog. Ian talking about hyperscalers still being the biggest providers of sales for that unit, but others, AI clouds, industrial and enterprise, grew quicker quarter over quarter. It's a trend that investors will want to see accelerate to remove the concern that it's too dependent on customers who have their own components and an incentive to move away from Nvidia. Dina Bass weighing in and saying that at the same time, the greater growth in non-hyperscaler customers does point to the idea that indeed folks like Google and Amazon, while they remain huge Nvidia buyers, are trying hard to expand the workloads they can put on their own chips and get more of their cloud customers to choose them over Nvidia GPU. You cover the neo clouds. You understand what the hyperscalers want. What do you make of that sort of revenue diversity question and the companies that have their own ability to do this, pushing their customers into their own products?
So I agree with the push and pull here. Obviously, it's important that over time that enterprises go direct, not through hyperscalers, to broaden this market. I think it's a very positive trend. Nvidia, of course, will be a beneficiary. On the other hand, particularly this announcement the other day with Google, yes, Google and Amazon in particular are working very hard on their homegrown chips. And it looks to me like they don't want to just lower their own costs by using their own chips internally, but in Google's case, they're going to sell these chips on the merchant market. And so over time, it could be a threat. Why? Because Google has very deep pockets, almost endless resources to compete. When you have other companies that say they can compete over time with Nvidia, be careful, because these guys have the best balance sheet there ever was. But Google probably can make a go of it, and I imagine Amazon will be on their heels.
Well, hey, Paul Meeks, sit tight. Paul is head of technology research at Freedom Capital Markets. I want to say goodbye to Ed Ludlow, Bloomberg Tech co-host. In the meantime, we are getting quite a bit of news, including SpaceX files for a NASDAQ IPO under the ticker symbol SPCX. The company is seeking a NASDAQ listing. It's filing for a NASDAQ IPO under SPCX. We're also, Emily, getting some numbers from SpaceX as well. First quarter net loss of $4.28 billion. SpaceX first quarter revenue, as the company files for an IPO, $4.69 billion. The company, according to Dow Jones and according to Bloomberg News, will have two classes of shares, Class A and Class B. Goldman, Morgan Stanley, and Bank of America are leading the SpaceX IPO.
You have to imagine how much of a windfall this is, not just for the banks, Tim, leading this IPO, but also for the NASDAQ exchange. We know that there was a little bit of competition between the major stock exchanges of just exactly where this company was going to go. But again, that number, first quarter revenue, $4.69 billion. SpaceX first quarter net loss, $4.28 billion. These are some of the first numbers, kind of the first real look, right, Tim, that we're ever really getting on one of the largest privately held companies in the country right now. I'm
looking at shares of NASDAQ in the after hours. This is NASDAQ, the company, NASDAQ, the exchange, who has won this listing. The other earlier reporting had shown that the NASDAQ was likely to get it, but still investors sending shares of the NASDAQ up in the after hours by 1.3%. Certainly a major win for the NASDAQ and Adina Friedman and the team over there at the NASDAQ. Once again, like you said, Emily, we are for the first time getting these numbers. They are worth repeating. SpaceX's first quarter revenue coming in at $4.69 billion. The company, though, also had a net loss of $4.28 billion in the first quarter. First quarter adjusted EBITDA of $1.13 billion. Elon Musk, not surprising to anyone who's covered an Elon Musk company, he will have control of SpaceX matters needing holder approval. That SpaceX IPO filing is out. The company has filed for a NASDAQ IPO under the symbol SPCX. And again, we're getting some numbers. $4.69 billion is that first quarter revenue.
And we're getting the S1, the registrations for this company.
It's a nice late reading.
Right. If I'm not mistaken, there was a potential chance here that we would not get this paperwork right now, that it was going to be a confidential filing, but we are getting, this looks like hundreds of, like you said, Tim, light reading about the company, about numbers of like rocket launches that they've had. I assume there's going to be a lot of information also about Starlink in here. Maybe quite a bit of command F-ing going on in this.
We've also, too, got some other headlines. The company says Starlink has about 10.3 million subscribers. SpaceX's 2025 revenue, so revenue for the entire year last year was $11.39 billion. The company was granted 200 million performance-based Class B stock to Elon Musk. I will also note that if you have a Bloomberg terminal, the terminal subscribers can access the live blog that follows SpaceX's IPO at TLIV. Go. There you will find all the information as our team, including Eric Johnson, who covers space, Ed Ludlow, who covers Bloomberg Tech, Anthony Hughes, who covers capital markets, and more, go through this. SpaceX's space segment revenue came in at $619 million. As I mentioned, 2025 revenue for SpaceX is at $11.39 billion. SpaceX's first quarter AI segment revenue, $818 million. It also entered into a compute pact with Anysphere. First quarter revenue, once again, coming in at $4.69 billion, and first quarter net loss coming at $4.28 billion.
And just reading some of the comments here in this S1 filing, a quote from Elon Musk, alongside plenty pictures of rocket launches. Elon Musk saying, I think fundamentally the future is vastly more exciting and interesting if we're a spacefaring civilization and a multi-planet species than if we're not. And that's what being a spacefaring civilization is all about. Certainly a sentiment that we've heard from Musk.
So we're getting
quite a long time.
We're going to Mars?
I guess so. We're building data centers there.
Yeah, I mean,
on the moon.
Jeff Bezos did weigh in on that and said it would be some time before we get those data centers. On SpaceX, as of March 31st, 9,600 satellites were in low Earth orbit. Again, these headlines crossing the Bloomberg terminal. The company has also entered into an option pact to buy Cursor. First quarter AI segment revenue coming in at $818 million. 2025 income from operations coming in at $4.42 billion. First quarter connectivity segment revenue coming at $3.26 billion. Once again, first quarter space segment revenue at $619 million. Starlink, that business has about 10.3 million subscribers. There was a time when some analysts thought that SpaceX would actually spin off Starlink into a separate business. And instead, what we've seen from SpaceX is that the company has instead gotten bigger and now, of course, has XAI as well. The company also, we should note, says that transactions with Tesla in the first quarter of 2026 and 2025 were immaterial. So that's a question, I guess, about the way that these Elon controlled companies have done business with one another. We have reported, Dana Hull has reported about how SpaceX was a large registrar of vehicles that came from Tesla. For example, SpaceX was registering those cyber trucks. And the flip side of that is, how does Tesla, for example, use SpaceX products like Grok AI and XAI? You
have to imagine that there is a lot of blending together. And of course, it'll be interesting to have almost two stock market gauges for like sentiment around Elon Musk. We've seen that shares of Tesla kind of trade very closely to any type of Elon news. So now we'll have basically another ticker to follow. Just a reminder here, this is the largest private company led by the world's richest person, targeting as much as $75 billion in a listing at a valuation of more than $2 trillion, according to Bloomberg reporting.
Wow, we're talking about SpaceX, which has filed to go public on the NASDAQ with the ticker SPCX. The company did purchase $131 million worth of Cybertrucks, according to this disclosure. The AI platforms across Grok and X have over $1.3 billion of active accounts. I want to bring in Anthony Hughes, a Bloomberg News Equity Capital Markets reporter. Anthony, this is truly the moment that you and the team and we have all been waiting for, and it happened today at 4:45 p.m. Wall Street time. SpaceX has filed to go public on the NASDAQ under ticker SPCX. We're also getting some numbers. First quarter revenue coming in at $4.69 billion and first quarter net loss coming in at $4.28 billion. What can you tell us?
Well, I think, it's interesting the filing finally came through after all this time, and how much we've written about this already. And a lot of the information here is along the lines of what we expect. I think, the cursory things that I noticed anyway, as someone who follows the process of the IPO, is that, there's 23 banks on the cover. Goldman Sachs is indeed lead left. Then Morgan Stanley is second on the list, followed by Bank of America, Citigroup, and JP Morgan.
So everybody is there.